My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey, what's up, BobMortgage Nation? This is the 80th episode of the Mortgage Report. Mortgage bonds last week made a very nice climb. We established a new trading range in between the 25-day and the 50-day moving average. CPI numbers, which is the Fed's favored measure of inflation, all that came in as expected. Didn't help us or didn't hurt us. Where we really got to pick up the lift in the bonds and the flight to safety was around really two things. The concerns around Brexit in the UK, and then Fed Vice Chairman made some comments, and they were centered around the global economy. He was concerned that the slowing of the global economy is starting to have an impact in the United States, as well as his comments around interest rates. He feels that it's very reasonable for them to stay in a neutral position, which pretty much told us that the Fed, at least from the market standpoint, maybe the Fed's not going to raise interest rates next month at its next meeting. So those are the things that kind of gave us the lift. Other thing we have to look at from a stock market perspective is, look, I'm going to put it out there, but it's kind of like the recession, right? When unemployment goes below 4.5%, which it has, and it did last year, you can kind of expect a potential recession to take place 3 years later. And that would put us at about 2020 for that type of event to occur. And with the Fed's actions, with them increasing interest rates the way they are, it's kind of putting us into a recession. So that way, if that happens, they can start cutting interest rates. That's kind of what our analysts have been feeding us. But let's take a look at the markets right now. You can see right now that this was on Friday. Bond market was up 28 basis points. 10-year was actually down 5 basis points, right at 3.06. We had a nice run up, and that's what we're talking about. We had a nice climb this week, which put us in a new sideways trading range. We had the 25-day moving average here with a 50-day moving average here. So we're in a really nice sideways trading range that we hope to continue. If we look at the 10-year yield and we start looking at this chart, what's important to see is we broke beneath this mark right here at 3.1, which was important. And if we can hold this and go all the way down to the 3.05 mark, that's going to be substantial, and that's going to really substantiate us being in a nice pricing pattern for some time. If we can get below that support level, then we have a really nice run all the way down to 3% on that 10-year yield. So bottom line, right now, I'm going into this week carefully floating. Market looks really good. We're going to see if we can continue to maintain this sideways trading range. Please follow me on Instagram so we can, in my stories, I'll give you some updates if I'm having to convert this from a floating position to a locking position. Look, I've been a mortgage advisor for over 20 years, been blessed to provide financing to over 25,000 families. I watch the markets daily to make sure I can get you the right home loan at the right price. Give me a call. With Bob Mortgage, your dream loan is already within your reach.